Hello, everyone, and welcome to another edition of the Smart Investor Market Update. Okay, today is Monday morning. I hope you all had a wonderful weekend. We're going to look at a general overview of what is on the horizon for us for this week. We have a number of interesting prospects, especially like how the markets are approaching some important resistance areas. We're also going to take a look at some stocks that have gained quite significantly, 100%, 110%, 60% in the last couple of weeks. And we're also going to take a look at the stock of Twitter. I know the stock has been beaten down over the last just a year ago. The stock was spoken about badly. It was beaten down, but it has made a recovery. So we're going to take a look at that. But first, let's take a look at what is happening in the futures markets. The Dow Jones Industrial Average is up 104 points, and let's just take a look at the Dow. And the market is coming up. The market is coming up to this resistance area at 25,500. Notice we're still in this sideways price action. 2018 started roughly here, and as you can see, we're slightly below water at this point in time. So the market is still down for the year, and we're in this sideways consolidation pattern. So although you hear that the Dow may be up, it may be down, nothing much is happening, and what we need is a breakout of these consolidation levels to get a strong view or a strong forecast as to where this market is going. If I would draw the consolidation points a little better on the Dow, we see the market is in this triangular consolidation. And as a trader and as an investor, you have to know how to deal with triangles, and there are specific rules that you can use to deal with triangular situations. So that is what's happening in the Dow. Resistance is at 25,500, and support comes in now at 23,600 or so. If we break below this triangle and below this important low at 23,000, that could spell fairly bad news for the market. So 23,000 is the point that we are looking for if you are focusing on the downside for the Dow. S&P 500 this morning, so far it's up. Futures is up some 10 points, recovering nicely, and S&P 500 is closer to its resistance point at 28,000. Resistance is here at 28,000, and 2800. Market is at 2800. So if we draw our triangle, it comes in somewhat like that for the S&P 500. But if we do breach this 2800 level, the next area of ultimate resistance will be the all-time high in the S&P 500 at 2,874. And if we just move the line up, this is the level that we're looking at, 2,874, and on the downside we're looking at 2,550. That's a broader support and resistance points in the S&P 500. If we do close below 2,550, I'll be out of this market because what we could see is a fairly significant correction. Okay, taking a look at the currency market, we see that the US dollar index is moving down after hitting resistance at that 95 level. And I spoke about, let me just clean up this chart. I spoke about resistance at that 95 level, and if the market doesn't overtake that level, we could see the US dollar start to lose some ground. If you take a look at the euro currency futures, you see that we had support around the 115.26 area, and the market has bounced nicely from that support point. Just clean up the charts a little. Bounced nicely from the support point, and if you notice that 115.20, what is the significance of that level? The significance of that level is that the market, this was a resistance point that held the market for a number of months. We were in a channel situation, and the market stayed below that 115 level in the channel. Now, when the market did ultimately break out, we saw that the market found support at 115 level again, because remember, the rule in technical analysis is that once resistance is broken, it oftentimes becomes support. So it became support here, the market rallied, and now looking in the future here, we see that the market has come back down to the support, the broken resistance that has turned support, and is now bouncing from that level. So that's a very interesting thing to look at for the euro currency. Area of resistance, if we take a look at the daily chart, we need to close above. If we close above this area, is 118.45 level, that could signal further gains for the euro in the future. Taking a look at the British pound, we see that the British pound is recovering also. We had a fairly strong uptrend ever since 2017 into early 2018. May 2018, the market came down and is now looking to regain that upward momentum in the British pound. Looking at the Canadian dollar, again sideways action to slightly down ever since 2018, just like most of the other currencies. The market started at roughly the 80 point for the year, and we're now at 76.56. Now, with the rally in crude oil, one would think that the Canadian dollar would rally, and that is a correlation that people often bring up. But what this shows you is that just because oil is rallying, that does not necessarily mean crude oil is the Canadian dollar is going to rally. Sometimes the markets do decouple, and you have to be aware and take a look at that. Moving into the crude oil market, we see that oil is made a new high last week, and this is our Fibonacci retracement. We see that the market, let's clean up the chart a little. We see that the market, my charts are all filled with drawings. I was doing a lot of preparatory work for some clients over the weekend, so I was looking at a number of markets. But anyway, we see that the market made a new high last week above the $73 region, and what we're looking for this week is the market to continue above 75. If we can close above 75 or 76, that'll be fairly bullish for this market, and then we could be closing in on the $80 level. And just as I was speaking about the rally in the Canadian dollar and crude oil, we see that this is a very strong rally in crude oil, but the Canadian dollar was moving in the opposite direction. So just because sometimes you have a rally in a commodity or a currency linked to a particular commodity, that does not necessarily mean it would rally in tandem with it. On the major market we're going to take a look at is the gold market before we look at our stocks that are up. And we see that gold found support in this 1,250 level. Found support at 1,250 and is rallying off that level. So we have gold is at a point where there's significant resistance. We have significant resistance at 1,360 up to 1,380, and strong support at this 1,240 region, as you can see here. So those are the levels that we're looking for in gold. And many folks have been talking about a breakout in gold, but we need to see, this is a weekly chart of gold, we need to see the market close above 1,380. And if we do see such a close, that would be very bullish for the market, because the market has been in a consolidation pattern, a head and shoulders consolidation, a reversal pattern ever since 2014, which is the head, shoulder, head. So this is a reverse head and shoulder, 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 head. Or if you want me to redraw it, this is the shoulder, this is the head, this is the other shoulder, the shoulder, shoulder, head. And what often happens is that the market breaks out of this neckline and above the neckline, and that would be considered a fairly significant breakout. So that's what we're looking for in the gold market, and that's what we're going to be keeping our eyes out on. Okay, so that is what we're seeing for the major market. Now let's take a look at some of these stocks that have rallied fairly significantly. And the first one is Fox Factory Holdings, and Fox Factory. Notice how ever since 2000, we started 2018 fairly negatively. The market was down from 38 down to 34, and we're now at 52. So this is a market that is rallying fairly strongly and is in an uptrend. And this is a market that I like to look at, and I like to, if I'm going to establish a position, it will look something like this, something that is making new highs and is rallying fairly significantly. So even though the S&P 500 is not moving that much, we see stocks, individual stocks that you could be playing, that is doing fairly well. The other one that's doing well is eGain Corporation. Okay, eGain again in a fairly strong uptrend. And notice how this stock was in a downtrend during the 2014-2017 time, and during that time we had a fairly strong bull market in the S&P 500. We had a turnaround situation, market turnaround roughly at $2, and we're now at the $17 region on this stock. So this is a stock that has just broken out of a new high. Notice this stock was at $750. The market has broken out of that downtrending situation and is moving significantly to the upside. Now the problem with a stock like this is that we have a strong resistance above the market. This market was once at $750. So even though you may see a significant rally, you have people who own this stock all the way from 2000 that could be selling into that rally. And when you have strong resistance above a stock like that, I tend to look at elsewhere and be very cautious if you have a position in a stock like this. But this is a stock on the move. And the final one we're going to look at is ADB, which is automatic data processing. And this is a stock I've been this is a stock that I have been looking and keeping an eye out on for a while, because it is in a fairly strong uptrend. We see that ever since the 2009 market bottom, the stock has steadily moved to the upside, and it's not a stock that has been super explosive, but you have seen some very good moves to the upside ever since the 2009 bottom. So it's up almost 400% in keeping roughly with what S&P 500 has done. But this is a nice stock, and at this point in time, this stock is a whole. Now the other stock which folks, social media, which folks use a lot, especially people who want to get their message out. We're in an age where you can easily get your message out instantly, and people can see what you're saying, is Twitter. Now when Twitter first came out, let's just look at the weekly chart. In 2014, it started at $75 region. It was in a strong downtrend. It bottomed at $15, but as you can see, you have a double bottom situation here that happened in early 2017, and then the market turned around and rallied above resistance at $25, and we can see the market coming up. So it has almost tripled since the bottom. So this is a stock that we need to keep an eye on. And as Twitter finds new ways to increase revenue, to increase advertising revenue, the stock may continue to do well. So that is something to keep an eye out on. As usual, with every stock, with every market, whether it's forex or futures, you have to have your stop losses under the market and your exit points. And if you don't have your exit points, you need to develop exit points and a systematic view of getting your exit points, so you can profit consistently from the market. Now, over the last couple of days, I've been offering a free investing class. Now this free class is for folks who trade stock, futures, or the forex market. It's a free one-on-one class that will look on exactly what you are doing in the market now, with a view to improve your investing, and so you can have a profitable strategy moving forward. This free class is done one-on-one with me personally, in the comfort of your own home. What we'll do is get together over GoToMeeting, and we'll look at each other's charts. We'll look at investments you have made, whether you're a stock investor, whether you're forex or futures. We'll look at what you are doing and how we can improve your trading going forward. A number of folks have done these classes with a number of folks, and the reviews have been very beneficial, because what it is a focused, individualized class that focuses on what you are doing and ways that you need to do or ways that you need to look at to improve your trading. So it's very beneficial, and it's a unique opportunity that is offered to you as an investor. So if you want to benefit from the free class, what you can do is click on the link below this video to sign up for your free class. I will be doing them over the next couple of days, and then what I will do is pull the offer, because it is time consuming, but it is very beneficial to you and also beneficial to me, because it gives me an insight as to what traders are thinking and gives me new ways to improve my product and my offering to investors. So click on the link below this video to get your free class, and I will see you again tomorrow. If you have any questions, send them into info@smartinvestorcentral.com.